I think sometime in 2023, we're going to set a new high water mark for producer prices, particularly when the current recession ratchets up to a new gear. And that's likely going to be when we get the big increase in unemployment. And I know there's a lot of people out there who are waiting for, in fact, hoping for the big increase in unemployment because they think that's their get out of jail free card for inflation. People assume that even though the Fed's not making any real headway on its goal of 2% inflation, as soon as it gets some help from unemployment, once unemployment spikes up, well, that'll do the Fed's job, and that's going to bring inflation back down. No, the big spike in unemployment is going to kick inflation into a higher gear. And the reason that's going to happen is that the minute the Fed has to acknowledge the weakness in the labor market and starts adjusting its monetary policy by moving it to an easier trajectory, whether or not it actually cuts rates or returns to quantitative easing, but just indicates that there's a change in policy in recognition of the weakness in the labor market that up until this point, the Fed has completely denied even existed, the dollar is going to tank. And when that happens, you're going to see a huge surge in commodity prices. And all of this is going to exert more upward pressure on both producer and consumer prices. The main reason that we haven't seen a bigger increase in those prices is because of the strong dollar in relation to other currencies. But the dollar has only been strong because the Fed was committed to doing whatever it takes to fight inflation and continue to hike rates. Once the Fed has to surrender in that battle, well, then the dollar is going to be collateral damage, and all the so-called progress is going to be reversed because a weak dollar is going to put upward pressure on prices, not just prices, but on budget deficits, trade deficits, and on long-term interest rates. Remember, as the recession deepens, revenues decline going to the government, spending increases, we have larger budget deficits and more pressure on the Fed to create even more inflation to monetize those deficits. Also, if you look at the way the markets reacted to the hotter than expected inflation news, particularly in the precious metals markets, it indicates that investors are finally slowly waking up to the reality that when we get these bad inflation numbers, it's not a sign that the Fed is just going to have to fight harder to win its inflation war. It's a sign that the Fed is losing that war and that it's incapable of fighting hard enough to actually win. Ultimately, it's going to surrender. Inflation is going to win. And investors are slowly coming to terms with that reality because when the number came out, gold did exactly what it's been doing. It sold off. All of its gains were erased. Gold was up better than $10, I think around $12, $13 before the number, and it went into negative territory, but just briefly, and it quickly recovered, and it closed up almost $8.50 on the day, just under $1,798 an ounce. Silver did even better. It closed up 41 cents at $23.46, so it ended up finishing the day with strong gains. Now, on previous hotter than expected inflation numbers, whether it was PPI or CPI, which we're going to get next week, gold and silver were getting crushed on the news that inflation was higher than estimates because of the fear of a more aggressive Fed fight. That would mean rates would be higher for longer, which would be a headwind for gold. Well, now the markets are shrugging that off. You still get the knee-jerk, reflexive kind of reaction as the algorithms immediately sell into that news, but cooler heads are prevailing, and people who are actually thinking are taking advantage of these computer sell programs to buy the dip in gold and silver because they understand that higher than expected inflation is not bad news for gold and silver. It is good news for gold and silver. It's bad news for the dollar, and the dollar did rally on the news. It was down before the news, and then it had a big spike, but it ended up surrendering most of its gains on the day. This may be the dollar's last hurrah, the swan song for the dollar, because what's really going on right now geopolitically is we are reminding much of the world why it needs to move off the US dollar standard, especially some of these larger economies that are regarded as our enemies, like China, and some of China's friends, like India, and now, of course, Russia. And I think the Arab world is also taking a hard look at what's going on right now and considering their tenuous relationship with the United States and how easy it would be for some future president to vilify Saudi Arabia or any of those other countries for a host of political reasons. And I think a lot of people are waking up to the reality of the dangers that this dollar reserve system portends for the rest of the world, in addition to the cost of maintaining the dollar status, because the U.S. economy has so weakened industrially as a result of its reliance on this crutch, the ability to consume without producing, the ability to run enormous deficits, the fact that Americans don't have to save, that we can just go out and buy whatever we want and rely on the rest of the world to fund our profligacy. This is exacting a heavy cost on the rest of the world. But not only does the world have to bear the burden of this cost, but now they have to accept the risk of this status being used against them, as is fully evident from what's happening right now with Russia and the sanctions. So as I've been saying from the beginning, I think the United States has a lot more to lose from what's going on right now than Russia, because the ruble is just another currency. The ruble isn't the world's reserve currency. The dollar is. We have a lot to lose. Russia doesn't have much to lose. I mean, sure, Putin could lose some credibility, but as far as the overall Russian economy, who knows how much longer Putin is going to be in charge? The leadership may eventually change. Russia's status won't be dramatically diminished over the long run based on where it is now. But that's not the case for the United States. We enjoy this unique, exorbitant privilege as the issuer of the reserve currency. And our standard of living is dramatically higher than we would normally be entitled based on our productivity. Based on what Americans actually produce, we should be living a much lower standard than the one most Americans enjoy. And these higher living standards are only made possible because of the dollar's reserve currency status and the deficits that it allows us to run, both budget deficits and trade deficits. So the government can spend a lot more and consumers can spend a lot more and everybody can borrow a lot more only because of the dollar status. And that is what we are putting in jeopardy. Now, I think it was in jeopardy anyway. We were going to lose that status solely based on the enormity of our deficits and the unsustainable fiscal path that we've been on for years. But I think what we are doing right now on the world stage when it comes to Russia is going to backfire and accelerate this process. And Biden right now is bragging about how much damage has been done to the Russian economy, to the Russian ruble, to the Russian stock market. Well, you know, when you live in a glass house or a glass White House, you shouldn't throw stones, because even more damage is going to be done to the U.S. economy, the U.S. stock market, the U.S. dollar, when the dollar loses its reserve currency status, which at the moment is hanging in the balance, and our own politicians, our own central bankers are clueless to the reality of this threat.